What if the Federal Reserve was never created to protect America? What if it was designed to control it? What if the biggest financial decision in U.S. history wasn't debated in public, but quietly engineered behind closed doors in 1913? And we've been paying the price ever since? Because here's the uncomfortable truth. If you feel like your paycheck shrinks every year, if your savings lose value without you spending a dime, if debt feels permanent while wealth feels impossible to catch, that's not bad luck. That's design. What if inflation isn't an accident? What if boom and bust cycles aren't failures? What if the pain you feel today, higher prices, endless borrowing, financial anxiety, was warned about over 100 years ago and ignored? Tonight, we're exposing the secret Federal Reserve Plan of 1913, a plan critics said would quietly enslave America through debt. And before we go any further, a quick community check-in. Where are you watching from right now? Drop your city or country below. I read the comments. And if you want the unfiltered truth, the history textbook skip, hit subscribe. No sponsors, no narratives, just receipts. Because once you see this, you'll never look at money the same way again. Officially, the story goes like this. In the early 1900s, America was unstable. Bank panics, recessions, runs on cash. The Panic of 1907 nearly collapsed the financial system. So politicians said America needed stability, elastic money, a central authority to manage crises. Enter the Federal Reserve Act of 1913. Passed just before Christmas, when most of Congress had already left Washington, the Fed was sold as a public institution, created to protect the people. Sound familiar? A system created during a crisis, promising safety, promising stability, promising protection. Sound familiar? Today, we're told the Fed exists to fight inflation, to protect jobs, to stabilize markets. Sound familiar? But critics at the time, senators, economists, even presidents, weren't convinced. They warned the Fed wouldn't stop crises. It would centralize power. They warned it wouldn't protect the public. It would protect banks. Congressman Charles Lindbergh Sr. said the Federal Reserve would create the invisible government by the money power. Thomas Jefferson had warned decades earlier, if the American people ever allow private banks to control the issue of their currency, their children will wake up homeless. Fast forward to today. 1913, national debt, $2.9 billion. Today's national debt, 34 plus trillion, $1913 purchasing power, 100%. Today, less than 4%. 1913 average home price, $3,200. Today, $430,000. Plus, sound familiar? The system didn't eliminate instability. It monetized it. Every crisis since, the Great Depression, the 1971 gold shock, the 2008 collapse, and the 2020 stimulus explosion, expanded the Fed's power. Each time we're told, this is temporary. This is necessary. This is for your protection. Sound familiar? But here's the part they don't emphasize. Before 1913, money came first, and debt came second. After 1913, debt came first, money followed. That single difference changed everything. And at the center of that change was a mechanism so elegant, so dangerous, it guaranteed one thing: America would never be debt-free again. Here's where the story takes a turn. The Federal Reserve didn't just get the power to print money, it has the power to decide when money exists at all. Because under the Fed's system, money isn't created out of thin air for the public. It's created when debt is issued. No debt, no new money. And the biggest borrower in that system? The U.S. government. Here's the twist. The Fed doesn't fund the government directly. It buys government debt, treasury bonds, through banks, meaning every new dollar enters the economy already owing interest. This wasn't accidental. This was the elastic currency design praised in 1913. Elastic for banks, rigid for workers. Banks expand credit during booms. They tighten it during crashes. Profits are private. Losses are socialized. And the architect behind this structure wasn't who most people think. It wasn't just politicians. It wasn't just presidents. It was a closed circle of banking dynasties who met in secret years before 1913 to design the system. The meeting lasted days. The location was isolated. The attendees used fake names. And the blueprint created there still controls your life today. You won't believe the name. Let's slow this down and expose the machinery. Because once you understand how this works, the illusion collapses. The core mechanism. Debt-based money. Under the Federal Reserve System, money is not issued by the government debt-free. Instead, 1. The government issues treasury bonds. 2. Banks buy those bonds. 3. The Federal Reserve purchases them, injecting money into the system. 4. That money enters circulation with interest attached. This means every dollar is born with a liability. In 1913, critics asked a brutal question. If all money is debt, how can all debt ever be repaid? Answer, it can't. That's the trap. Fractional reserves, the multiplier. Illusion banks don't just lend money they lend money they promise. If a bank has $1 million in deposits, it can lend $9 million or more. That's a 900% expansion of credit. This creates growth and bubbles and fragility. When confidence holds, it feels like prosperity. When confidence breaks, the illusion collapses. That's why the Fed exists as a lender of last resort. Not to save you, to save the system. Moral hazard becomes permanent. Here's the poison. When banks know they'll be rescued, risk becomes strategy. 1929, crash, Fed expands power. 1971, gold window closed. Unlimited fiat. 2008, crisis. $16 trillion in secret liquidity. 2020, $9 trillion balance sheet explosion. That's not capitalism. That's parasitic finance. Profits are privatized. Losses are nationalized. Inflation. The silent tax. Inflation isn't random. It's a feature. Since 1913, the dollar has lost over 96% of its value. That's not theft with a gun. That's theft with math. If wages rise 3%, but inflation runs 7%, you didn't get a raise. You got poor. And the first recipients of new money, banks, asset holders, insiders, benefit before prices rise. That's called the Cantillon effect. It's legal, it's invisible, and it's devastating. Booms are manufactured. Busts are weaponized. The Fed lowers rates, cheap money floods markets, stocks soar, real estate explodes, then rates rise, credit tightens, assets crash. Who buys the dip? The same institutions that created it. In 2008, 8 million Americans lost homes, Wall Street received bailouts, executives received bonuses, engineered collapse, the original blueprint. The Federal Reserve model didn't originate in America. It mirrored the Bank of England, created in 1694. Same structure, same debt dependence, same elite control. By 1913, this system had already enslaved nations. America wasn't immune, it was the prize. Why gold had to die gold limited power? You can't print it, you can't fake it. So in 1933, gold was confiscated. In 1971, gold backing was ended. After that, unlimited currency, unlimited debt, unlimited control. Since 1971, thus, debt exploded over 6,000%. Productivity decoupled from wages. Asset prices disconnected from reality. Coincidence or design? The permanent consequence. Here's the final truth. A debt-based system requires expansion. No growth means collapse. No borrowing means contraction. So the Fed must inflate. Always. This means crises are inevitable. Inequality is structural. Stability is an illusion. The system isn't broken. It's doing exactly what it was designed to do. Here's the danger now. In 1913, the system was national. Today, it's global. Trillions move in milliseconds. Debt crosses borders instantly. Confidence breaks faster than ever. The next collapse won't look like 1929 or 2008. It'll be faster, bigger, harder to contain. And denial is the most dangerous currency of all, because institutions built on borrowed time don't fail gracefully. They reset. The lesson of 1913 isn't about villains and smoke-filled rooms. It's about power without limits, money without discipline, trust without accountability. And history has already told us how that ends. So ask yourself, are we wiser now? Or just walking the same path in better suits? If this made you uncomfortable, that's good. Truth usually is. Share this with someone who still believes inflation is temporary. Drop your thoughts below and subscribe. If you want more history they don't want you to question. Because the most dangerous lie in finance is believing this time is different.